So the ISM services gives one picture. The excess savings, potentially people spending on credit cards, student loan debt coming due, that paints another picture. What picture do you have?
I think the economy remains in pretty good shape, and we're likely to see the soft landing scenario, I think, now has moved to the fore. So I think the Fed has done a good job of bringing inflation lower, but not completely snuffing out the job market, so people can still find jobs. They've exhausted some of their excess savings, so as you say, they're starting to draw down on some of the savings that built up during the pandemic, and then also starting to borrow on cards a bit. But for the most part, consumers are in good shape. We're not seeing any loan delinquencies, and companies mostly are in pretty good shape as well.
Bruce, good morning. It's Guy. Do you think, therefore, the Fed has done enough? Do you think it needs to do any more to slow the economy down?
Yeah, I think they likely have done enough, although we'll just have to watch it. I think the ticking up in energy prices is something to consider, the continued strong consumer spend. But, you know, monetary policy works with a bit of a lag, so I think they have to wait through November and take another gauge of the data at that point. Likely they're done. If they go again, it might be one more 25 basis point hike. But I think that's it. And then likely we would see a pretty long period of stable rates before you start to see cuts. I think those likely hold off till the middle of 2024.
Just one more quick one on the consumer from that end. You guys did wind up ending your car dealer financing, right?
That's correct.
And it was because of recession worries. Like, are you disappointed that you did that now because of where the economy is, or are there other areas that you're looking at?
It's a little more nuanced than that. So effectively, once deposit costs increased through this whole rising rate with the Fed scenario, and deposits became more dear, we kind of looked at where were we invested on the asset side of our balance sheet. And auto is a relatively short duration asset that we kind of used as a shock absorber. It's not a very strategic business because we don't have deep relationships with those customers. They're customers of the dealer. So this was more of a strategic play. Let's run down some of our higher cost funding and run down that portfolio. In its place, we're using the capital freed up to launch this former First Republic private bank that a bunch of folks came over to Citizens. And so we'll run down $9 billion of auto and related consumer paper and build up $9 billion of loans to the private bank's customers. And so therefore that'll become a strategic use of our balance sheet and replace something that wasn't that strategic.
Bruce, are you feeling a little over-regulated right now?
You know, we're in a heavily regulated...
Every CEO say yes to that. Does he have to say yes?
Well, we're in a heavily regulated industry, and you know, some of that regulation has really kept the industry strong and kept the confidence of all our stakeholders. I think at this point, some of the new proposals feel like they might be overcooked in terms of requiring more capital and kind of gold plating what the Basel framework intended. But there's a significant comment period right now that I think you'll get lots of views on that. So, you know, it'll play out down the road, but for the most part, we're continuing to try to maintain good relations with the regulators and keep the banking system safe and sound.
And of course, we're talking about having to issue longer-term debt if you have a market cap of over $100 billion. There also has been reports here at Bloomberg that the Fed is putting a lot of pressure on you guys, not you personally, but regional banks, to beef up other measures as well. How does that affect your end product?
Well, I think if you look at the report they did on SVB's failure, they had a bunch of MRAs, or these recommendations from the regulators, that really weren't followed up promptly. So you would expect in the wake of that the regulators are going to be more on the front foot, more putting pressure on banks to really tighten up how they run and to get things done on time if there's any issues outstanding. But I think that's all manageable. So I don't think it affects necessarily how we're running the bank, but we have the strength and the breadth of talent to be able to comply with what they're looking for.
Does more regulation, Bruce, imply more consolidation? Can I extrapolate one from the other?
Yeah, I think there's a couple things that potentially drive more consolidation. So that would be one. So if the costs of operating the bank on a standalone basis go up, and these new regulations really run right over tailoring, which there used to be break points where the load was a little less the smaller you got, which is now kind of called into question by these new proposals. So I think that could potentially foster more consolidation. The other thing is just the way the world is changing so fast, and banks have to invest in digital and data analytics and AI and cyber defenses and fraud defenses. The smaller banks really, to afford all of that investment, are going to need to consolidate, I think. So I think certainly at the smaller end of the equation, you'll see consolidation due to more technology and business model reasons. But the bigger banks, the question is, do you want to have just 4 mega banks that are in the too big to fail category, or do you want to spread that out and have more competition for those very big banks? And that's a policy question that I don't think Washington has determined yet which way to go on that.
So does that mean no or yes to you? Like no or yes in terms of looking at acquisitions? Because you sit right in the middle of the two things.
Yeah, no, I think right now you're not going to see a whole lot of acquisitions just because with rates as high as they are, the deal math doesn't work very well, and it's still very opaque in Washington as to what their posture is. So I think that'll kind of stymie deals over the next 6 to 12 months. But you'll start to see things getting done at the smaller end, and then we'll see if there's what happens with the next election cycle, and is there a change in the regime, and could that, with falling rates, if rates go back down below 4% and there's a fresh regulatory view, does that facilitate more transactions maybe in 25?
How long do you think it's going to be, Bruce, before America has another SIB? Is that the ultimate direction of travel here? And do you see your bank playing a part in that process?
Yeah, we have a long way to go before we would get all the way to that size. But, I think some of the Category 3 banks, you've had PNC be aggressive as a consolidator. You've had U.S. Bank as well. So I think, there's opportunities for some to try to scale that $1 trillion level. We'll see how it plays out.
Give me some idea in terms of just the issues that were at play in this industry, say 6 months ago. Deposit outflows, then deposit inflows, as there were some concerns about other banks, et cetera. Net income margins is getting squeezed. Has the bleeding stopped, or where is there still a trickle?
Yeah, I think we're in a period of stability. And from where I sit, the worst is behind us. And so deposit flows have stabilized. The migration from your non-interest-bearing deposits to interest-bearing has slowed. So I think you saw pretty good results on those dimensions in the second quarter earnings. I think that will continue in third quarter, that you should see more deposit stability. Well, certainly banks are going to continue to pay up for deposits, so funding costs are going to go up, and margins are still getting squeezed a little bit. But I think they're close to bottoming out. The other thing that we're seeing is the capital markets are starting to open up. Like Citizens is going to be on the cover of 3 IPOs this month, which we haven't been able to say in a long time. And so there's deals flow starting to pick up, which also should help the revenue picture.